Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 6:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands, 26th day of June 2020, and this is the Daily Report for Gold and Silver, our weekend review, and a very interesting week at that. As America attempted to reopen businesses, we had a resurgence of new cases of COVID. In fact, yesterday was the highest reported daily incident since the pandemic started. And we saw tremendous pressure on U.S. equities. The Dow came down about 700 points today, about 1,000 throughout the week. And we saw the precious metals as a whole complex firm up. It was dollar strength at the beginning of the week that really held back any kind of real gains, but with a neutral dollar, we saw gold move strongly higher in the futures, moderately higher in the cash market. Let's take a look at pricing, and then we'll take a look at our technical studies. Gold gained about $20 on the week. It had an exaggerated range today, actually trading to an intraday low this morning of 1754, hitting a high of 1788.20, and then closing up $14.20 at 1784.80. When we look at spot gold, that also gained ground, $6.52, 1769.89. The low is important to Forex traders, 1747.56. They are long from 57 with a stop at 47, so that stop was unaffected today. Platinum gained slightly, about $1.30, 804. Palladium gained what it lost yesterday, roughly $48, 1893.10. And silver gained a respectable 5 cents at 17.95. That is about 1/3%, and that is really with a neutral dollar, 97.44.5, up 0.06% on the day. U.S. equities tumbled today, with the Dow losing approximately 700 points today and almost 1,000 points on the week. This first chart is a daily chart of August gold futures, and what we really want to focus on is today's daily trading range, and especially the low that came in, because as you can see, we have created a basic trend line. This is our support line. It's at an incredibly steep angle. We drew it from a series of lows, this low here, of course, and this low here, and here. And then when we extend it up, you can see that the low that came in really matched this line and didn't break into it. So even with this exaggerated low, technically there was no chart damage. And when we look at a weekly chart, we can see that the entire trading range from the open to close, not the low, was well above the congestion area that gold had been caught in over the last couple of months of trading. In fact, in order to see the last time gold had traded to this level on a weekly chart, we need to compress the chart to include the activity of 2012 as well as 2013. And when we do that, we see something that is quite fascinating. Take a look at this triple top that came in right at around 1800, and then match that to this area here. And what we effectively see is that we are trading near the upper end of the range after gold hit its high and then fell dramatically down to about 1537, and then for a couple of years really was caught within a pretty wide trading range of 1540, call it, on the low, and 1800 on the high. And you can see that is precisely where we are at. A move above this, and what we have is, on a technical basis, no real technical resistance until we hit the record high of 1920. So we could see the market consolidate at this area. However, I believe that it is not if, but when we will challenge and break $1,800 on a closing basis. And once we do, we could in fact go and challenge these record tops at about $1,900 per ounce. But to look at the short-term support and resistance areas, we really need to look at a shorter term chart. This is a 480-minute chart, continuous contract of gold, and here we've drawn our short-term support and resistance areas. Obviously, I believe that we have a couple of tops that provided some real levels of support, particularly this area at around 1760. We can see a series of lows that came in, but for the most part, this held. Today, it challenged that for a short time, but did close much higher on the day. In terms of the next level of support that we're looking at, that comes in at approximately 1775, and that of course is based upon this former top here. And then we do have resistance coming in at 88. That resistance is the former record top that was achieved back a few months ago. However, I do not believe that the former top at 88 will really cause us any real resistance. I think that major resistance comes in at the tops that were achieved this week, as well as $1,800 per ounce. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for the next daily update and review. Bye-bye.